In focus today is Cebu-based timber and oil palm player Taan. RHB Research upgraded the stock from neutral to buy and revised its target price upwards to RM3.05 from RM2.75. The counter last closed at RM2.92. First, a look at Taan's first half core profit. ringgit 93 million, up by over 100% year-on-year and boosted by significantly higher average selling prices or ASPs across its timber and plantation divisions. RHB says the numbers were above expectations at 70 to 71% of the research house and the street's FY21 projections. At its timber segment, RHB believes the run-up in domestic plywood prices in Japan gave leeway for Taan to raise export selling prices. And moving forward, the company expects the positive momentum for this unit to continue as the ASP uplift remains sustainable. Over at its plantation business though, growth in fresh fruit bunch or FFB has been declining. Year-to-date to July, RHB says Taan's FFB growth has moderated further to minus 11% year-on-year. The research house also revised its FFB growth assumption to minus 3% for FY21 from minus 1% previously and 3 to 6% for FY22 to 23 from 3 to 5%. But it's raising its ASP assumptions by 8 to 10% for all divisions and increasing its earnings forecast by 29% for FY21, 12% for FY22 and 11% for FY23. RHB says Taan does not sell its CPO forward and should therefore be able to fully benefit from the current high prices. Meanwhile, log and plywood price hikes are now expected to be more sustainable, given the continued tight supply in key markets. So what's the consensus? According to Bursa Marketplace, there are 6 buys and 1 hold on the stock, with a target price averaging out to RM3.44. Taan last closed at RM2.92, so that's a potential upside of about 31%.